Good morning, everyone. This is Pips of Africa. I'm back with another video. I'm sorry, guys, I have a flu, but I'll make sure that this video, I'll finish this video now. So on this video, this is part 4. As I promised that I'll come back with part 4 of the secret order block, of the order block secret. So already you see what is happening here. Sorry about this. Let me try to switch this to. So now we have the order block was here. This was the sell candlestick before the up move. This was the last down candlestick before the up move. So what I did here, I marked, because I took this trade. I'm still in this trade, I have to say. So I marked this order block from here. Let me try to change the color. Then also change this one. Come to this one. So now we have to, I did mark this order block like this. Here to this week. Because you need to also consider the stop loss for your, you need to consider the week, these weeks, when marking an order block for your stop loss, right? You can't ignore the week. Yes, we take the bodies in terms of the 50% Fibonacci, but we also need the week, right? We need to take the week. We need to consider the weeks. All right. I want to show you something that is very, very important for you to understand. You understand that the price, okay, it is the time for me to employ the RSI and show you the secret of this thing. You see here, I'm going to do this. Okay, the price was here. The price was here. Okay, so I saw that the price was going to the downside. It was creating the lower high, lower low, lower low. I'm not gonna count this one. Lower high, lower high, lower low, lower high, lower low. And here, the price tried to show us the break of structure, which was not real. This was the break of structure, right? And then what happened? The price broke the structure here. And then it left what? An order block here. And this order block is what is valid. Let me show you how to trade this order block here. If you see that this order block is valid here, I'm referring to this order block. Let me show you this, the order block that I'm talking about. Okay. The price, it came back to this order block, inside this order block. Then it went to the upside. If you went to smaller time frames, you are going to make a lot of money here. This is daily time frame. You are going to see the break of market structure here. Let's see how are the things on smaller time frames. Let's see how are the things on smaller time frame. Let's see, especially the break of market structure at this point. I want to show you something that is magic. Same thing here. I'll come back on this one. I'll come back for this one. Right? So the other thing that you have to know is that here there was this buy to sell order block, and the market started to consolidate like this. This is what I was explaining. This is what caused the market to rally up like this, to break this supply here, this order block here, It got broken because of this order block. So the market has to come back and react on this order block. Check the market did not respect this order block. It just broke below this order block, right? So what we have to do here is this. You need to wait for, that is why it's very important to wait for break of market structure on the lower time frame. There was no break of market structure on the lower time frame here. That is why you didn't take this trade here. Even if the price came inside this order block, there was no break of market structure, and then the divergence of the RSI according to more smaller time frame, it was not there. So here, there's already a divergence here on the bigger time frames. I want to see if there's a divergence here inside an order block. Let's do it. Let's go down also on 1 hour, because this is daily time frame. You see what is happening? You see what is happening on the 1 minute, on the 1 hour time frame? The price is currently here, and there is no break of market structure, right? So let's take a look, right? On what is going to happen. This is the hourly chart. The RSI is already showing us something. Late. Wanted to mark this zone here and see if it's going to hold. Right? So let's wait and talk about something. If you didn't catch it there, remember I told about the smaller candlestick before the bigger candlestick. You have to mark this one. That is why I marked this one. The smaller candlestick before the bigger one comes out. So you mark these zones. Let's start by checking if there is something, because there are no order blocks here. I was going to check the volume. So here, there was these two smaller candles, but the price didn't reach there. It tried to come below, to come down on this zone here, but it didn't reach there. Let's see if it's going to reach this zone here. If it doesn't, then there's no trade for us. Here, what happened? Okay, let me use this one. I want to show you something that the divergence was not there. You see here, this low, this is the lowest low. The market didn't come below. We wanted to see something like this. Wanted to see the market moving up like this, moving down, then move up. You see now there's a divergence. There's a divergence now. Because the RSI is pointing up, the price is pointing down. But we didn't see that. That is the first thing that would make us to doubt that the price is now reversing. Okay, let's then wait. But I'm looking up to this zone and this zone here. Just wait and see. You see, the market didn't come here. Didn't come here. So this is what you must know there. Even if the price go up like this, you can take a trade somewhere here if you want to. But if I didn't see the divergence here, I won't be taking that trade, because it means that it will come back very soon. It will come back to me very soon, right? If there was no divergence before the order block started to form. This is what I was talking about, because some people were going to mark this order block here and expect to trade from it. Because we didn't see the divergence here, it means that the price is going to come back very soon and grab liquidity underneath here. Let's wait and see. You see what is happening now? Sorry. You see what is happening? The price did not it didn't go to the upside. This is not a break of market structure, good people, this week here. It's not a break of market structure. The price needs to close above with a full body, right? Here there was a market, it was a break of market structure. Here there was a break of market structure. But here this is not a nice break of market structure. It can be liquidity grab, this one. It's just a liquidity grab. So we need the market to close above with the body, not with the wick, right? So I think that one is clear. So I wanted to show you how to confirm if the market is completely leaving this area or not. To start with, there was no divergence here. The price was still having high and low here. This low is higher than this low. So we needed something like this. Pushing up, pushing down, right? Then showing us the market is moving down. The other side is going to it's pointing up, the price pointing down. So we needed to see the divergence like this one. Then I was going to take this trade to the upside. So let me go back to daily time frame. So this is daily time frame. Let's take a look. Already there's a divergence. We need to mark the divergence that is occurring. Started from this low up to here, right? We saw this order block. We saw this order block here. The divergence was already there. If you check here, from this low to this one, the divergence was already there. But remember this, if the order block was not mitigated, you must not delete that zone. Look at this. Was this order block mitigated? Was it mitigated? No. Even when the market was going back up, it didn't respect this order block. It was supposed to go up and then go down. It went to the downside, violating this order block. It went up, violating it again. It went down now. So this zone here, buying the market here, knowing exactly that above there's an order block that was not mitigated, it is very risky. This zone, this order block here, this one, it is looking good, this one. It was not mitigated. So the price went down, violating this order block, it went up, violating it again. It went down, violating it again, 3 times. And then we can't be expecting the market to just break above just like that. Meaning it can do that, it can break above, but it is too risky to buy the market here. We want to see the market breaking up again here and then leaving an order block underneath. Let me show you that. Let me show you what I'm talking about. You want to see something like this. If you want to trade around this zone, you wanted to see something like this one. If you want to buy the market here, we want to see the market closing above. This candlestick, this one, closing above here. And then we will know that the market, it has broken the structure here. It closed above the structure here. That's when I'm going to buy based on this order block. When the market returns to it, right? There was this divergence between the price and RSI that occurred here. The market left an order block somewhere here. I'm only waiting for what? For a break of market structure. For the market to break above. This break of market structure here, it was enough. This one. But we only had this zone here. You wanted the price to at least break above this zone here, which was not respected before. When I see the market breaking above this zone, I was going to wait to buy the market around here. Then when the market comes back, just to come back in this manner, then I was going to be comfortable buying at this area here. The market was going to rally like this. So this was the zone. This zone here is the one that made me to doubt buying the market here. Because I know that if the order block is still not mitigated, the price will always respect this area. It will be hard, it will be very difficult for the market to break this area. So I want to see the proof that the market is now breaking this area. The market I was waiting for something like this, coming back to it and then shoot to the upside. But rather leave a long week that is coming to mitigate this one here. Then the market was going to shoot to the upside. I didn't get that. So you must know that if the order block was not mitigated, you can't be buying here. You can't be buying underneath here, expecting the price to just break above here. No, that won't happen easily. It can happen, but it won't be easy for the market to break above. This zone, it was not respected when the market was going down. It was not respected when the market was going up. It violated this zone 3 times. So it was failing to break above this zone after breaking it to the downside. So you can still expect this zone to hold the price. Buying down here, when the market returned from this zone here, it is very risky. Because the market, yes, it can buy a little bit and then push to the downside like this. Simple as that. You look to the left, you check what was there before the price comes here. You saw there was this order block. And then the next question, was it mitigated? Was it fully mitigated? The answer is no. It means that you have to wait for the price to break above this zone here and also break the previous structure. Then you can wait for the return of the price and then take the buy around this zone up until then you push the price to the upside. That's what you have to do here. So now let's continue. All right, so let's wait and see what is going to happen now. Because I'm running out of time. I don't want this video to last more than 40 minutes. So now I want to see what is going to happen. I want you to check this thing. You see what happened? This is what happened. The price did this thing. It went up. It went to the downside, trying to mitigate this one. And then it went up after mitigating this bullish order block. This sell to buy. Let me try to make it visible. The sell to buy order block, it got mitigated here. That is why you saw the market pushing to the upside, trying to push up. But it failed because why did the price fail to push above this zone here? Because this area here, it was for this order block which was not mitigated. Then the price is failing to break above because it didn't mitigate this order block. It has to mitigate this order block before it continues with its trend. right? So the price rejected from this zone here, then it went to the downside, right? What you see also. And then you see this other block, the buy to sell. Let's see what is going to happen. All right, so the market was here. And then I was waiting for the market to come back on this other block, because this is what I was talking about on the previous videos. Here. Can you see this thing? Can you see this thing? The price has broken the structure. Let me show you. This thing is amazing. Has broken the structure. It has broken this zone here. Here it did broke this zone, but there was no other block underneath. Let me show you this. I'll take my time. If there's an order block here, and then the price broke above this zone here, we have to expect the price to come back, and then we're going to buy it here. But you can't buy it based on the order block on. We have to see the divergence on the RSI and also the order block here. We're supposed to see the divergence here, the order block here, then the break of this zone, then the return to the order block, then push the price high. But you didn't get all those things, right? Okay. So why am I trusting this one now? Somebody will be asking that question. Why is this guy trusting this area now? Why do I trust this order block? That is the question that we're asking ourselves. Let me just answer that question. Let me just answer it quickly. There's an order block here. There's a break of market structure. There's also a break of this strong zone that was holding the price, not to break above. Let me repeat. There's a break of market structure, which you see here. There's also what? There's this other block. We have two things already. That tells us, that confirms to us that we can buy this market, right? Number three, the third category, the third rule. If you remember those rules, I think you have them with you there. What do we see here? Let me show you. What is happening on the RSI? The RSI is pointing to the upside. The RSI is pointing to the upside, starting from which low? From this low. From this low here, right? Up to this low. You see, the RSI is showing us the higher lows according to the RSI, but the price is showing us what? The lower low, lower low, lower low. Right? Okay. You don't just buy based on RSI, but you need to see the break of market structure. You need to see an order block. You need to see what the divergence in the RSI, between the RSI and the price. It is simple as that. Now we got our break of market structure, the break above the zone, the strongest zone, which was holding the price not to break above. Break of market structure, the break of this zone, the order block here, and the divergence, right? Let me show you how I traded this one, right? So after having the divergence, this is supposed to be here. I'm going to tell you something. After having the divergence, this is what you must do. Because you must know that even the retail traders thought that the market, they thought that the market is going to buy, is now buying. Because here, if you join your trend line from this low up to here, you see what happened. There was this, the first touch. Remember, I always tell you this thing. For the support and resistance, we are not trading support, I know. But for the support and resistance to be valid, retail traders, they need at least 2 touches in the trend line on the support. For the support to be valid, we have the first touch, the second touch here. Therefore, this trend line, this support is now valid according to their method of trading. So they were waiting for the third touch for them to buy based on this trend line. What happened? The market presented as if it wants to go higher. and it went to the downside, taking all their monies. Stop loss here, stop loss here, stop loss here is out. 2, they are break and retest traders. You see the market, they break and retest traders. You see the support was broken. They wait for the market to push higher, retesting the support. So they say if the support got broken, it will be a resistance and no longer be a support. Let me repeat that. The retail traders, they say if the support got broken, it will be no longer a support. It will become a resistance. Who are saying that? Those are the break and retest traders. Those are what are the break and retest traders. They say that. So look at this. The price went higher and then it rejected. It pretended as if it wants to go down. As you see the bearish candlestick here, it was there to confuse the retail traders. What do you think they did here? They sold the market here, putting the stop loss above here, and then they were selling here. What happened? Let me show you that. They sold here, stop loss above there, targeting this high, this low here. What happened? The break and retest traders, they are now out. The price shot to the upside, manipulating the break and retest traders who are now selling the market. The buyers got manipulated here. The price shot to the downside, taking all their stop losses out here, hitting them out. The price went back up, creating the break and creating what? Turning the support into the resistance. Because the market makers, they know where our stop losses are. They know that through support and resistance, right? They know that if they move the price like this, if they break the support, retail traders, they think that the price will come back. The price have to come back into the support and retest the support and turn the support into a resistance. That's happened. It happened. Then the price pretended as if it wants to go lower. It didn't go lower, then it went to the upside, manipulating them again. Right? So what happened? As a smart man traders, we were waiting. Right? The price was up here. We're waiting. We're still waiting for the market to come back down here. The divergence, we got the divergence, that the market is ready to go to the upside. We got the break of market structure here. We got the break of this zone. Right? Okay, let me try to employ the volume. I almost forgot to employ the volume. You see what is happening now. Let me try to hide the RSI. All right. So this is what happened. What do you see here? You see what is happening here? What do you see here? You see what? You see the order block. The order block is showing us what we see in the price. Remember, one of the rules that I've shown you last week is that what we see in the price, we also have to see it in the volume. The order block that we see in the price, we also have to see it exactly as it is in the price, in the volume. Exactly as it is in the price, but we have to see that in the volume, happening in the volume. So now you can check here. You see the bearish one here, candlestick here on the volume is smaller than the bullish one. It represents exactly what you see here. The bearish candlestick is small. This one here, this one here, according to the volume, is small. This one is bigger than the bearish. It's bigger than this one because this one is representing this one. This one is bigger than is bigger like this one. So what we see here, we see the same thing. Okay, let me start this thing like this. What we see here on the volume, we also see in the price. We also see it here, exactly as it presented in the volume. Right? Okay. So let me try to hide the volume. So this is what I was trying to say. Okay. So right. So now this is the sell to buy, and here the sell to buy is the same as the sell to buy in the price. So the first confirmation, the volume is telling us that this order block is valid. One, the volume is telling us that this order block is valid. Two, we already see the divergence. The divergence is already there. You see the RSI, compare the RSI to the price. The price is going down, the RSI is going up. So that is the divergence. Number two, divergence is there. The volume is already confirming that this order block is valid, right? The break of market structure is there. Number three, the break of market structure is there. Number four, confirmation number four. Let me try to hide the volume. Confirmation number four, you recall that I said to you, the order block, the bearish candlestick in the case of the bullish order block, the bearish candlestick has to have the longer wick than the one for bullish candlestick. The wick of the bearish candlestick has to be longer than the wick of the bullish candlestick. Let me repeat that. The wick of the bearish candlestick has to be longer than the wick of the bullish candlestick. Check this here. Check this here. So you see, the wick of the bearish candlestick in the case of order block, bullish order block, is longer than the wick of the bullish candlestick here. So all the four rules have been met, right? Okay, so let me come to this one here. Some people will say this one is an order block. This is not an order block. This is just a demand. This one here, this is not an order block. The price was jumping here. Didn't create an order block, right? We trust this one. Most of the time, order block, the body will be equal. The bottom of the bodies for both candlestick will be equal. In most cases, this one, it doesn't look good to me. Yes, the price came back to it and then it went up, but I trust this one. Just trade an order block like this one, where it is going to have the similar body, the bottoms will be equal. The bottom of the bodies will be equal, like here. And here, the bottoms of the bodies are equal. And this one here, the wick of the bullish candlestick of the smaller candlestick is shorter than the wick of this one. So we can't trust this one. You see this one is better because the wick of the bullish candlestick in the case of the bearish and the bearish order block is longer than the wick of this one. So go back and check those rules. So now, because I have all the four rules met, I can then trust this order block. Let me try to mark it up. Right? Let me try to mark it up. From the body down to the wick. Yeah, I'm sorry, guys, I have a flu. So now let's wait for the price to come back here. All right. So I saw this when the market was still here. I saw this when the market was still here. All right, guys. So now we left with 5 minutes to finish off this thing. So now I saw the price. The price was currently here. You see, the price was currently here, and then the price took off from this low here, and it went to the upside. They can't leave this low here like this, hanging like this. They can't do that, right? So I waited for the price to come back around this zone. This is, by the way, daily time frame. So what I did here is this. Let me try to show you that setup. This is the setup. As you can see it, hope you can see it. You can see here, I saw this also the schematic there, the PS, perennial support, selling climax, automatic rally, secondary test in phase A, sign of strength, break of market structure here, and then the spring here. Then I wanted the price to come back here to give me the test. So it was 17 August 2021. It was 17 August, meaning last month. So I took this picture on this day, 17 August, right? Then let's go back to the chart. So here on the chart, then I wanted to see that the price is going to come below here. Right? Then I went to smaller time frame, like 1 hour time frame. You see here what is happening? Let's wait and see. All right, we see this other blocks, this one and this one. I want to see them got broken, being broken. These two, this one and this one. So let's wait and see. Right? The price went up, it went down. Still here. We see what? We see the divergence from this low to here. And then the price is showing us what? Showing us that the price is going down. Right? Let's wait and see. Okay, what you see here is what is liquidity. There's liquidity. You must take note of all these things. Remember, on those points, I once mentioned that be able to see when the market makers are still creating liquidity. Here, they were still creating liquidity here. This touch and this touch. So this one is a double bottom. This low and this one here, they are equal. So which makes them double bottom. And then this has to confirm to you that the market will be buying. Let's see. This is another confirmation. We still see the divergence here. The other side is showing us what? The divergence. The price is showing is moving, it's going to the downside, the other side is going up. Let's see. We're still waiting. You see on the other side, we're still having this divergence on the other side. We want to see the price giving us an order block, breaking the previous structures. This high here, we have to mark it up. Right? Okay, so this is the demand that we're getting. Okay, let's mark it up. This is the demand because we have order block and demand. So let's confirm if this one is valid because the wick is not below, is not longer than the wick of the bullish candlestick. So let's confirm it according to the divergence is confirming us that we have to buy around this area here. But let's check the volume as well. Let's try to put in the volume. Look what happened, the volume. This one The small on the volume, we have the smallest candlestick here, and this one is smaller than this one, then smaller than this one. So you have to see the same thing when you compare the volume and the price. Compare the volume and the price. Right? So we trust this one. So this one is now an order block. Right? It means that they sold here with a smaller lot size, then they bought with bigger lot size than the one that they used when they were selling here. They sold with a smaller lot size, then they bought with a bigger lot size. So the volume is confirming that. Right? So it's confirming that the market maker has to push the price here to close these sell orders here. Right? Even though this one doesn't look like a clean order block. Okay, but the volume is telling us that the price has to come back here. There's a divergence, there's volume here, which is confirming this order block that is indeed valid. So we need to trust this volume here. We need to trust, this order block. What the volume is telling us the same story as the one that is being told in the price. So this is what I'm going to do from now on. I'll go down to smaller time frame. I'll delete this zone now because I don't need it anymore. Right? You see what happened here? Again, the price grabbed liquidity once again, one more time. It grabbed it here. Maybe I must use this trend line. This video is taking long, but I'm about to finish now. You see here. This is the liquidity, meaning the double bottom. Even here we have it. Right. So here we have a liquidity, and after liquidity, we have order block. After liquidity, we have what? We have order block, which broke this minor structure. This minor structure. We have this structure here and also this structure here. So this is the supply that that caused the price to break or to grab liquidity. So this is the supply that pushed the price to grab liquidity underneath the double bottom. Let me repeat that. This is the buy to sell that led the price to broke or to grab liquidity underneath the double bottom or the equal lows. So we can trust this order block. It is valid according to the volume and according to the RSI divergence and according to the liquidity grab and according to what, to the break of market track. You can see there are so many things that we can use to confirm the order block. If to confirm the proof of the validity of the order block, right? So now we have this zone being marked. Let me go down to 5 minute time frame. You see, even on 5 minute time frame, we have this one here, the sell to buy. Okay. I don't like refining order blocks, but let's leave it like this. I want to get rid of the volume, to take the volume out. Right? So on the 5 minute time frame, this is clean and clear now. This is clean and clear. We have the first break of market structure here, here, and here. The price was continuously leaving in order blocks here. But there's this imbalance here. You can't ignore this imbalance. For the price to completely leave this area, it has to close the gaps or the imbalance and also mitigate the order blocks. Let's wait and see what is going to happen. Now I'm trying to show you how to take this trade now. Remember what I said? I said that to you, the price has to start by creating an order block. Hey, sorry. It should start by creating an order block and then shoot to the upside. But it must not come back like this. Okay, it is to create an order block like this and then shoot up shoot strongly like this with an order block, shoot up, come back in the form of lower low, lower high, lower low, lower high, lower low, lower high. This is another confirmation that the order block is valid. And finally tap inside the order block before it took off. It take off, right? See what happened here. The price created the high here, but it failed to break it up, to break above. It went to the downside, went up like this, down, up, right? It's creating the lower high, lower low, lower high, lower low, yeah, lower high. I'm not gonna count this low. I'm counting this one here and this one. Lower high, lower low, lower high, lower low, lower low now. We're still having this lower low. Let's wait and see what is going to happen. All right. So now let's wait and see. I'm trying to show you how to take a trade based on this one. So this is what I did. Below this low, and then I use the 50% of the hourly order block. 50% of the hourly order block. And then I'm gonna take here. I'm gonna use this one. Remember, there was this order block which was not mitigated. This one here. So you can expect the price to play inside this zone before it take off. Remember, we trust this order block because it broke the previous supply which was introduced. I'm referring to this one. This was the supply which pushed the price to the downside, right? And then this was the demand. Remember, I don't remember if it was part 2 or part 3. Go check this thing there. It was there. I was explaining it there. Didn't know I'll find it here. Then the price started by introducing the supply here. The buy to sell is the supply, which led the market to go down, to break the structure to the downside. Making the retail trader thinking that the price is going bearish because it broke the structure to the downside. Then the market makers they introduced the demand for it to break this supply here. That is why I trust this demand here. All right. So I want the market to come back on this demand. The market makers introduced the supply, which pushed the price to the downside. Then they reintroduced the demand. This demand was introduced for the aim of breaking this supply here, which was previously introduced. So they need to come back here on this zone here. They need to come back here for the mitigation of this order block. Let's check the 15-minute. Okay. 5 minutes is okay. Now, this is what I want to see. Then let's wait and see. And then the TP is according to the daily time frame. This thing is not appearing here. So let's do it like this. Stop loss below this low. The TP here, because we have this liquidity zone here. These are relative equal highs. And then also the retail traders were getting involved here. retail traders were getting involved here. So the market makers, so if they are getting involved here, their TPs are here, are down here. They think that the market is going very, so it's going to break below here. It didn't. So we're going to be trading this thing like this. Try to squeeze it because on the 5-minute time frame, it's gonna be big. Let me go down there. Okay, it is not appearing still. So the TP is according to daily time frame. That's what I'm trying to say to you. So this is our order block. So let's wait and see. All right. You see what happened now? You see now, the price came back down. This is why I said to you, I take the 50% of the hourly order block. Do not refine up to this order block here. Do not use this order block. You'll miss a lot of trade if you refine according to this one. You see, I let the price run like this. I let the price run like this. I got my divergence here on the 5-minute time frame. Here, right? From this low up to this low here. So the price was falling. All right, I want to make it clean now. So the price was falling. The price was falling from this low to here, but the RSI was pointing up. From this low, the RSI was pointing up like this. And then after the divergence, we got an order block, which was very strong. Even on the 1 hour time frame, we got this order block. So this zone here is an hourly order block. So I had to mark the 50% of the 1 hour order block. So my entry is at the 50% of the 1 hour order block, right? That's what I did. So the price came back here, then it took off. So this one was just attracting retail traders. You see, 1, 2 touch, the third touch, the retail traders bought here. They pushed the market to the upside, then the market went back down. You see, it was even jumping. It was taking them out here because according to the support and resistance, this is liquidity. This is a trap. The market jumped like this, hitting their stop losses, then it went to the downside, hitting even this one, and then it mitigated the order block there, right? Because I told you that this order block here, remember last time I said this order block, it was not mitigated. This one here. Right? This sell to buy. It was not mitigated. Price just shot to the downside, valuating this one. It shot to the upside, valuating it again. So that is why the price coming back around this zone here. Then it took off. And this zone was at the 50% of our order block. So then it took off after mitigating this order block, which was not mitigated, and then the 50% of the 1 hour order block. Then now I'm waiting to let the market, let the trade run. So at this point, this is what I usually do. I wait for the price because the price is already breaking the structure to the upside. Right? Right? So now, let's wait and see. Let me just. Let's wait and see what is going to happen. Just want to let the price run. I want to move my stop loss into break even now. All right. Now the price is there. It's up there. Right. All right. So the break of market structure has occurred already. And also here, there is what? This is a schematic already. This one here. The spring. Here we have the PS. Here we have what? We have the selling climax. But I'm not going to talk about that now. Let's look at this trade. So my stop loss now is going to move from this zone into a smaller profit. Right? It's going to be in profit. Break even. So if the price decides to come back, it will take me out. I don't put my stop loss here. Here. If I believe that the price has to go up according to daily time frame, I don't put my stop loss here. I put it down there. I just need that smaller profit. So if it comes back, it takes me out in that smaller profit. Then I let it run. My TP is there. It's going to be there. You see the price might be reaccumulating here. Here. The price might be reaccumulating. So let's go to the 1 hour time frame to speed up the process. right? The price took out this low. You see now the market is currently around here on this zone, right? But I wanted to see it coming around this zone here. It already took out this high here. That is why it was dropping like this. Okay. So we know, let me show you the reason for this, for the market to come lower like this. It was because of, let me try to delete everything. But you know that the market is currently here. It's currently here from this point. So we can be able to push it up there. I'm waiting to push to the upside there. So let me try to delete everything. Now I'm done with this video. So I'm trying to show you why the price has to come back down here. There was this order block which was not mitigated. The sell, the buy to sell. This bearish order block. See the market, it went up, went to the downside, it consolidated here, reaccumulated inside, it went to the upside, broken this zone. This was the proof that the market wants to go higher. And then we had to mark up this zone here. Here. That is why I used to say to you, if the order block was not mitigated, do not delete that zone. It must remain there until it get mitigated, right? So from this zone, the price, it was coming back from this order block, which was not mitigated. Then it's completely moving to the upside now. So I'm looking, I want to see this happening. I want to see this happening, the price continuing to the upside. But the TP will be this one also. The first TP will be here, according to these relative lows. So the TP, you can see the TP was there. So thank you so much, guys. This was the video that I was promising you on. So this is GBP USD, the trade. As you remember that I'll keep on moving my stop loss up until the price takes me out. The market takes me out. So now, thank you so much. This was the part 4 of the video. As you know that we started on part 1, part 2, part 3. This one was the part 4 video. So I'll come back with part 5. Then I'll be analyzing another pair. So thank you so much. Enjoy the rest of the day. So thank you so much. Enjoy, guys. Make sure that you subscribe, you like, you share the video. And then for those who want to join the Telegram channel and also Facebook channel, check the description below. The link is down there. So please enjoy the rest of the day. Go and practice until you are perfect. Thank you so much. I love you all.